Alright, welcome to another episode of Island Wealth. My name is Ronnie Camara, and today we're going to talk about how Bitcoin can change your life. How investing in Bitcoin can change your life. And what we're doing, why are we doing this? We are doing this because we want to help you. Everything we're going to say in this episode is for educational purposes only. That means that you have to take your own risk. You have to do your own analysis. This is only for entertainment and for educational purposes. What does that mean? That means that I'm going to show you and teach you and talk to you about what is Bitcoin and what that can mean for you. As you know, probably you know, as you have been following me, there is a Bitcoin model, and a model is a way to simulate the future. It doesn't predict the future, it doesn't forecast the future, it is not a magic thing. It only gives you, based on certain assumptions, it gives you potentially what could happen. I create a lot of macroeconomic and global models. As a matter of fact, I have created 12 macroeconomic and investment models for 8 islands in the Caribbean, of the Eastern Caribbean, Curacao, St. Martin, Turks and Caicos, and Jamaica. So I use economic models to simulate what will happen. And of course you have to have some assumptions, own assumptions. You can bring it into the model and then it will calculate based on your assumptions. So we have today another episode about the Bitcoin model. I've been talking about this Bitcoin model. Michael Saylor has contributed to this Bitcoin model, and a person from India created this model together with Michael Saylor. If you don't know who Michael Saylor is a billionaire who is the owner, one of the main owners and founders of MicroStrategy. And MicroStrategy is a company, and they have just bought Bitcoin. They have the most Bitcoin as a company in the world. So neither Tesla, Nvidia, Google, Microsoft, Yahoo, none of those companies have as much Bitcoin as MicroStrategy. That's why you want to follow MicroStrategy, and you want to follow what Michael Saylor does with his money. If you want to be wealthy like Michael Saylor, maybe you want to become a millionaire, maybe you just want to leave something for your kids, maybe you want to become a billionaire, maybe you want to own 10 million assets. This is for you. But today we're going to start small. Let me go to the Bitcoin chart. You see the Bitcoin chart here? This is yahoo.com. You can just put the BTC USD, and I have put here for you, if you invested in Bitcoin and you started in January. Here you see in January, you see what Bitcoin was in January. You see that? That was about 43,000 US dollars. And you don't need to have a whole Bitcoin. You can buy a little piece of Bitcoin. You can just have like $100 in Bitcoin. You can save $100 per month in Bitcoin, $500 in Bitcoin. So just like you are saving money on your bank account and getting 3%, you could have saved $500 in Bitcoin. You could have saved $1,000 in Bitcoin. You could have invested $1,000 in Bitcoin before doing other stuff, going to restaurants, having the island wealthy lifestyle, buying all kinds of purses, while you are buying something, other people are buying Bitcoin, because there are only 21 million Bitcoins. So you can buy a piece of Bitcoin. It's called SAT, S-A-T, and in one Bitcoin there are 100 million sats. So you don't need to have $60,000 to buy a whole Bitcoin. So here you see that Bitcoin was 43,000, then it went up in, let me say, in January, February, March it was 72,000, and then it went down again, and today we are at 68,000, something like that. Let me say, no, we are at 67,000. So you see Bitcoin is moving sideways. If you want to look, this is year to date, this is what happened in this year. If you want to look at the 5-year, then you see the trend. If you look at the whole max Bitcoin since 2000, let me say since 2009, but we have some information here from 2014, you see how Bitcoin has increased. So it can go up, it can go down. We follow this. You can put many other stocks around here, because Yahoo Finance, this is finance. You can put another stock. So let's put another stock here, and let's put Nvidia. Nvidia is a stock. It's related to artificial intelligence, because Nvidia is producing chips, and the chips are needed to calculate, to support artificial intelligence. Artificial intelligence is just a computer program running, doing a lot of calculations, using a lot of data, and you need some chips. So because there is artificial intelligence in almost everything, or people are expecting it to be used in almost everything, therefore the chips companies are also very much in demand. So you see here how Nvidia has risen and how Bitcoin has risen. So you see Nvidia and Bitcoin were among the same thing here in 2019, and look at how Bitcoin has increased more than Nvidia. So even Nvidia, which is one of the companies who has grown more than almost all the other companies, you see that Bitcoin is better. Now let's put some gold in there, because I want to put gold. You can also buy a golden product, digital product, gold. You see? You can also buy that. So GCF, that's gold, purple, safe. So look at gold. Look at what happened with gold. So even gold, while people are saying, let's not put it even the maximum, but let's put it at 1 year. So even gold, you see that gold has increased. Let me see. Gold is basically very flat compared to Bitcoin. Okay? Gold is very flat compared to Bitcoin. So that is what I wanted to show you there. But today we're going for the spreadsheet again. That's the Bitcoin model spreadsheet. In a past episode, we have just looked at the previous sheet, macro sheet, and now we're going to look at the individual. So if you are an individual, we also have corporate, a business, we have institution, we have an indebted nation, we have a wealthy nation, United States. So today, individual. How does this work? How does this work? If you have any questions, just ask the question, and let me test this. I want to know how this works. If you ask the question, then maybe your question can be put on screen like this. So if you're following me on Facebook, on YouTube, on LinkedIn, try to ask a question. Try to ask a question, and then maybe I will bring your question into the episode. Okay? I might bring your question into the episode, because this is especially for you. How does this work? Today we will have a normie. Normie is somebody, you see here, doesn't have any Bitcoin, earnings in excess converted to Bitcoin, 0, and then 0% savings rate. So this is a normie, and the normie, you see here, what do you see here? You see here that you have this 0% of Bitcoin purchased. If we want to look at how this program is calculated, as you know, we have to go to the formulas on top, trace precedent. So trace precedent, this is just showing you that you didn't purchase any Bitcoin. Your Bitcoin is 0.5. You start with 0.5, right? You starting with 0.5. Your number of BTC is 0.5. In your assets, you have you have this is how this is calculated, is this number here will influence all the other figures over there in the future. So you have 0.5 Bitcoin. You have 0.5 Bitcoin. Your mortgage costs are $250. You can change this. You will pay 5% on your mortgage. And because you pay 5% on your mortgage, that's why the $250, you will see here below that your real estate asset is $500,000. Okay? Then, where does this 500,000 come from? Trace precedent. You see that this 500,000 is 500,000 in real estate, is 50%. You have 50% of 1 million. So the 1 million here is the total assets you have, excluding BTC, and real estate is 50% of your total assets. So everything in yellow you can change, and this is how you calculate that real estate you have 500,000. Now equity, let's look at how this equity, how is this $300,000 in equity calculated? Again, you have to trace precedence, and you see that this 300,000 is calculated because you have 1 million in assets. You have 30% in equity. Equity could be Nvidia, it could be Tesla, it could be stocks like Shell, it could be a portfolio of stocks. So you have 30% of your 1 million in total assets, and that is 300,000. That's how this is calculated. So this is bonds. How is this bonds calculated for this person? Again, we go on this formula, we check trace precedence, and we see that this person is a normie. $1 million, 15% is bonds. So this person has bonds And why does he have bonds? He has bonds because probably he bought some bonds of the United States, because he believes that the bonds of the United States gives you a great return. Now there are countries like Curacao, or islands like Curacao, who also believe that. Curacao sold its gold, 1/3 of its gold. It sold it because it wanted to have bonds, and the bonds would give it a return on investment. Okay? So Curacao needed some return on its investment. It had gold, physical gold, and it decided to sell 1/3 of its gold and to buy bonds of the United States. Now, as you have been hearing from me, the United States has 120% of debt to GDP. That means that the debt as a percentage of income of the United States is 120%. More debt than income. So the bonds of the United States are less worthy or have risk, because to pay those bonds back, the United States will print money. It will not reduce its expenditures. It will probably not raise its revenues by raising taxes, etc. Ms. Kamala Harris, Vice President, wants to raise the taxes for corporate America, and I expect then many businesses to leave America. So there are limits and limitations to increase your revenues. So if you know that, and if you know that the United States has 100% and that has many off-balance sheet commitments, then there are many people, global macroeconomists, investors, that believe that the United States can never pay back its debt. So the United States will keep printing money. Now, if you are buying bonds of the United States, then you will be paid back in dollars, which are just printed. How is that for your return? This person has $150,000, and the rest, the currency. So let's look at the currency. Trace precedence. The trace precedence, this is how you analyze a model. I teach these in my strategic experiences that I have online. If you are interested in one of these experiences, next one will be the Island Wealth Investment Academy. It's a 3-day intimate, only 50 people online experience where we talk about the 12 islands in the Caribbean. If you are living on one of those islands, Eastern Caribbean, Curacao, St. Martin, Turks and Caicos, we will be discussing. Maybe St. Martin is not in part on it. Jamaica also, we will be talking about the models, the economic models of those islands. We will be comparing them, and then we will be talking about Bitcoin, about investing in stocks, about investing in precious real estate, villas, etc. And also what will happen in the world, what is expected in the world, how can you protect your island wealth, how can you grow your wealth, either if you are a high-paid professional, or you have a business, you are a business owner, or you are a private investor. That will be great. The 3-day investment academy, where you will learn more. So stay till the end, and you will know how to join the VIP lounge of that experience. So this person has $50,000 in cash. And why is that? Because 5% of its cash, of 1 million in assets, it has in cash. So if you don't believe this, you might say, I don't believe this because Rooney, this is too much. I have less. I only have 500,000. So if you only have 500,000 in assets, then this needs to become 500. See that? You change that. And when I change something, I will turn it in orange. I will turn it in orange so that I know I changed something compared to the base case of the Bitcoin 24 model. So if you change that, of course you will see that your total assets, you might have liabilities also, the debt, etc., but your total assets that you have become 500,000, and then everything here below 33,000 will be a percentage. So what you do is you put individually your 500,000 in here, or what you want to achieve. Maybe you want to achieve $10,000. If you're starting, you want to start. Let's make it start. You want to start with $10,000. So instead of 500,000, we only have 10,000. Then you're just starting. You are just starting 10,000 because this is 10, and you see the K in there. 10,000. You're starting buying BTC. This is your percentage. You might have 5,000 in 50% in real estate. Now this is a little bit unrealistic, but you see the point. So let's move this back to, I think, 500,000. Okay, we move this to 500,000 because the bonds 15%, real estate's 50%. So you see that the 500,000, the mortgage. Okay, this is the mortgage. And how is this mortgage calculated? So we're going step by step through this. You see 500,000, 50%. 50% is real estate, right? 50% is real estate, and it's picking up the 500,000, 50%, 250. Let me see, 250, and it's taking D5, 550, 06 is taking 06, 50% times 06 times D5. All right. So 50% is in real estate. 50% of the assets excluding BTC. I would have expected that this is 250, but I need to check this. I would have expected that 500,000, that 50% here of 500,000, you see, D5 is the total assets, 500,000, and then 50% of it is in real estate. And then I do not understand why they are multiplying that with D5. D5, why they are saying 50%? Because 0.05 is already 50, you see? I have to check if this is. So when you are looking at the model, you have to be able to check the assumptions made, because maybe they made a mistake. You understand? Maybe they made a mistake, right? So I would expect the mortgage to be actually 250. Okay? So what I do is I will add a comment, new comment. Let me say new note, and then I would say this should be assets times real estate percentage. So I would expect this to be not the 50%, but to be only 0.5 times 500,000. Okay? So maybe we found a mistake here, but it's not important. It's just checking up. Just checking up. So real estate is 250. Okay. That is, okay, this seems good. Real estate is 250. But the mortgage should also be maybe 250. That's what I'm saying. So this 250 is good. This 250 is good because that's 50%. So the mortgage, I do not understand the mortgage is only 125. I would expect the mortgage to be 250 at the beginning. But we continue. So we understand all this stuff now. We understand this perspective. So total asset. It looks like they are taking the debt, and the debt is calculated by taking, you see here, the debt is calculated by taking this 4, putting a minus in front of it, and then taking AA14 from it. AA14, we don't see AA14, but AA14 is probably hidden here. See? AA14 is hidden here. So when I'm looking at this formula, I always want to understand where is this coming from. Imagining that I am created this for myself. Don't believe anything, verify yourself. So understand this model yourself. Okay? So apparently we need to check. I will not open I will not unhide this column right now. Oh, let me unhide it to just show what is happening here. You see? I just want to understand what is happening here, so you can actually unhide it. You see here? Something is coming here, but let me just hide it again. So you need to understand what is happening in this model. So why are we doing this model? Why are we reviewing this model? Going back, why are we doing this? Why should you invest in this spreadsheet to understand it? If you have been watching these episodes, then you know that we already covered the macro business case. Look at the previous video on my channel, and then now we're looking for the individual. So why are we looking this? Apparently this individual has a debt of 125,000, which is half of its total assets, and then you're calculating the total assets here. We're taking the debt, and then we will get the net assets. Assets minus liabilities is your net worth. So this individual has a net worth of $408,000. How much is your net worth? How much is your net worth? During the Island Wealth Investment Academy, I'm going to ask you, and I'm going to show you how you can calculate your net worth yourself based on your situation. But here you see the total assets of this person is 533. This person has BTC equity, so maybe it has stocks or it has their own business. I have my own businesses, so I can also put my equity in here. I can have the BTC. I can put the real estate. I can put the bonds. I don't have any bonds. Then the currency, that's the cash flow, and then the cash, and then you have total assets minus liability. So if this person would have had about 1 million, then the person is a millionaire because the person has net worth, net assets of 1 million. 1 million doesn't mean that you have 1 million in cash. You can be a millionaire in assets. Now, what is going to happen? How is this person going to accumulate Bitcoin? How is this person going to accumulate Bitcoin? So here you see the normie, these assumptions, portfolio converted to BTC. This is zero. Earnings, excess earnings converted to BTC. This is zero. Increased mortgage to invest in Bitcoin. Zero. Savings rate 25%. So this person will save from its income, from his or her income, but will not invest anything in Bitcoin. That's why you see that the Bitcoin, the amount of Bitcoin, this row, will stay at 0.5. So this person has 0.5 Bitcoin, half a Bitcoin, but will not do anything. But you see here that the price of Bitcoin in 2024, 2025, 2030, 35 is projected to go up. Why is it projected to go up? Because we are working with a bear case. If we have if we have a bear case, we selected the bear case. If we selected another case, which is the base case, and you go back to the individual, you will see that the Bitcoin price, because this changed into base, the Bitcoin price is changed, has a much, I think, lower. No, base case is much higher than the bear case. So look at this, Bitcoin going, this is just assumptions, we are not predicting anything, but what if Bitcoin increases in this path? And you have to follow the other episode to go that, to understand that. But let's just go to let's go first here. The base case, Bitcoin growing from 65 to 98 to 500,000 to 500,000, 2.1 million, 5.3 million, 13.4 million Bitcoin. Remember, there are only 21 million Bitcoins, and if you follow the other episode, you will see all the capital, 900 trillion of capital looking for that Bitcoin. That's also an assumption. So Bitcoin here going to 30 million. But in the bull case, the bear is going down, the bull is going up. In the bull case, you see here, Bitcoin will grow much faster, and then this will have impact on the individual, because the Bitcoin price can go down to 114,000, 1.1 million. So people don't believe, some people don't believe this. They are saying this is bullshit. They don't believe in the bull. They say this is bullshit. But Bitcoin already went from 0 to 65,000 in just 15 years. Just 15 years. And we have the graph to show that. There are people who believe that we are in the S curve, and in the S curve that it can go hyperbolic, and this is basically the hyperbolic. This is the bull case. But let's move back to the case where we just have conservative, we say bear case. There could be a bearer case, of course, the Bitcoin goes to zero. There's always opportunity that's going to zero. Some people believe it cannot go to zero. But this is what this individual will have. So how this model works is, you, in summary, you invest, you fill in your starting position in Bitcoin, your assets, total assets that you have, the earnings that you are earning. We didn't go into this, but the earnings you're earning per year, 200,000, 500,000, earnings growth, how much that grows, income tax, and then from the net income that you're receiving, you will be buying Bitcoin or not. Okay? You will be buying Bitcoin or not. So this earnings in excess, let me say how this calculated. You see here the 50,000, that is, the person has 200,000 in earnings and pays D7 and AA, probably that is a percentage. Okay? That's a percentage. That's the savings. Can be the savings rate, yes. Okay, we have to check that, the earnings. And then with that earning, they're going to purchase Bitcoin, and then you will have the Bitcoin count. But here, this person, 0 Bitcoin. But with 0.5 Bitcoin, the person's wealth, the person's asset will still grow. Because what we are interested is in this net assets. How wealthy will this person become? And because this person has 0.5 Bitcoin, the wealth is basically going to 490. 1 million, 2 million, 3.7 million, 6.6 million. That is just an assumption. And why is this wealth going up? Because you see that BTC, this is driving the wealth, the BTC. The equity will also, in the bear case, the equity is also going up to 3 million, from 150,000 to 3.5 million. The real estate value also going up. The bonds, going up a lot. But probably because they are printing money, and the currency is just also increasing. But I see the Bitcoin is basically from 33,000 to 1.6. Which one grows the most? You see here the compounded average growth rate. So you see here that the BTC is growing 20% every year. The equity is growing 16%. The real estate 4.9%. If you take inflation being between 7% and 15%, because they are printing money at least 7% per year. So that's the real inflation. Then basically real estate is not giving you a real improvement. Equity is above the inflation rate of 15%. So equity is giving you a real appreciation increase, and BTC is also giving you a real appreciation. So what you would do here, I would put a comment here. The comment could be insert new comment, and I want to say new note that study the real return. So including inflation. That's just a note I'm putting there. And then you see the bonds also giving you, if the inflation rate is, if the money printing real inflation is 15%, then bonds is also going you negative real return, and currency is also giving you negative real return, because only these two are higher than the inflation rate. So Bitcoin is growing. Now what would happen? What would happen if this person turned into, from a normie into BTC plus, BTC 10%? So this person is now not a normie anymore, not saving anything, but this person is converting, portfolio converted to BTC is 10%, and then excess earnings converted to BTC is also 10%, and the saving rate. So what we're going to do is we're going to change this into BTC 10%, and now probably you will see that something is happening here. Something is happening here. And what is exactly happening? What is exactly happening? Because this now, instead of this one, this now is leading. So this person started to accumulate 10%. We have to check. This is what is this? Percentage of portfolio excluding real estate that is converted to BTC. And this is remaining earnings are swapped to traditional assets excluding real estate in the same proportion as the starting portfolio. So you see here that this person now is buying BTC. So they are accumulating BTC, Bitcoin. And then the Bitcoin will also grow. So you don't have 0.5 Bitcoin anymore, but Bitcoin is growing. And then by doing that, you also see that the net assets have increased. So in 2045, this person could leave something to his or her children. If you invested here and all these assumptions become true, then you will be able to leave something for your children. Now these are just digits, because this 8 million, all the prices have already gone up. They have printed more money in 2045, but you will be able to at least keep up with inflation. So you see here that the compounded average growth rate is higher, 22%, that the portfolio, basically BTC went, you have 100% in assets, but if first you had 10% of your portfolio in BTC, and it went to almost half of your portfolio is in BTC. And the reason for this is that BTC is growing faster than the other ones, because this is the horse who's running 23% faster every year. And you have bonds staying at 13%, currency 11%, equity is lower than BTC expected, and real estate is also lower. So you will see your portfolio growing. Now what would happen? So you see, if you accumulate BTC, and if all those assumptions are true, even the bear market, I'll stay with the bear market for now, you see that this can be happening. I'm not saying we're forecasting this will happen, but given all those assumptions, this can be happen. Now, you would get 8.8 million. Now, what would happen if this BTC 10%? So your strategy is acquiring BTC at 10%. What would happen in the base case? So then you have to put this into base. Remember 8 million, and remember the 8 million, and now look at what the 8 million has turned into. So if there is a base case where Bitcoin grows with about 50% instead of only 25%, and growing about 50% per year, and just check the numbers, check the BTC chart I gave you at the beginning of this online experience, this online show. But check if you believe that Bitcoin will continue with 50%. If you are bearish, you would say that can become 25%. If you are bullish, you will say, hey, Bitcoin will grow with 70% year by year by year. We are not talking about the savings account anymore, because savings account will grow with 3%, inflation 15%, so net you will be 12% down. There is no savings account that will give you 50% increase interest rate, no stock that is growing with 50%, only maybe Nvidia, but Bitcoin is growing with 50%, and in the bear case it goes to 25%. So we're talking about increasing, and in the bull case it can go to 75%. These are the assumptions. We are not taking this 50% every year. We are slowing down, and this slowing down, we talked about that in this previous episode. What is the basis of that? Watch that episode and you will see that. So in this summary till now, if you are accumulating 10% of BTC and you excess earnings, so everything you earn more than what you need to live, you are putting 10%, converting that into BTC, and you are earning, your earnings are about 200,000, then you can execute this strategy. You can buy Bitcoin because the price will go up. I think they did this very nicely because they checked like, how can I buy? How much Bitcoin can I buy? You see? Given the price of Bitcoin, how much can I buy? Given this price, trace precedent, given this price, how much Bitcoin can I buy? We will dive a little bit deeper in here, but you can buy 0.1 Bitcoin because the price of Bitcoin is expected to increase. So that's why they are calculating this 0.1%. So there are many variables happening at the same time. The assumption is that the Bitcoin price is going up. The assumption is that you have a starting situation here and that you follow a strategy, and there is also an assumption that there is a base case, a bull case, or bear case. Many things. So normally you cannot calculate all those things by head, and that's why you are using an economic model. If you want to know more about economic models of Eastern Caribbean, Curacao, Turks and Caicos, Jamaica, St. Martin, then please make sure that you follow me, make sure that you share this, make sure that you have an investment plan, and then also join my VIP launch. And in that launch you will be sitting on the first seats, and you will be hearing about poverty, about wealth, about why I am doing this, why I'm sharing my information with all the islands in the world. What is my end vision? I will tell you a little bit of me, but I'm more interested in how and what are your plans to accumulate more wealth if you're living on an island. All right, so let's continue with this strategy. And we are looking now, because we have invested in Bitcoin in this scenario, we're seeing that the amount of Bitcoin is going to grow. See, this is just a projection. We see, compared to the previous one, we didn't have Bitcoin. Here we have 1 Bitcoin. We are becoming a 1 Bitcoiner. And now we have 1 Bitcoin. Now imagine you have only 1 Bitcoin, 1.1 Bitcoin, and your total Bitcoin portfolio, that it grows like this. And we have the base case. Just imagine having $58,000 in 2024 and $14.7 million in 2045. So this million, it can also become 0, but this million, do you understand what is happening here? Do you understand what is happening? Bitcoin is a limited, scarce, the only scarce resource in the world. I think we also have time, because the time is also limited and scarce. And I'm spending my time, maybe I have, how many days do I have? Have you counted? 20,000 days, 24,000 days? Maybe you have a scarce, everybody has a limited resource, which is time for you, for yourself. And then that time, the other thing that is limited, maximum 21 million, is Bitcoin. And Bitcoin is not crypto, because the other crypto assets like Ethereum, Solana, all those other coins can be printed. If you have the smart contract, you can. If you are the owner of the smart contract, you can be printed. But Bitcoin, nobody is the owner of the smart contract. There is no smart contract. We are all the owners of the code, and the code is set in stone. And it's running on all of our computers, and we are checking each other because we are not trusting each other. And by not trusting each other, by verifying, the whole system works. So Bitcoin is truth, Bitcoin is hope, Bitcoin is trust, and it is software and coding. If you want to know more about software, about how to produce software, how to code Python, and how to code artificial intelligence, imagine sitting behind your computer and having a skill to just have 20 artificial intelligence agents working for you. And you programming it, they are automating your life, automating your business, automating everything. Doing the boring stuff for you. Let me just show you what I mean. Let me show you what I mean. If you want that, let me see. If you want that, yes, if you want that, then by mid-January, I am having a Python Island Wealth Management program experience. It's going to take 8 weeks. And when it takes 8 weeks, it means that you're going in with only Excel spreadsheet working, etc. And you're going out as a Python programmer, understanding artificial intelligence, and be able to automate your life. And this is not just only chatting with GPT, it is programming and instructing ChatGPT and other large language models to do your stuff. Any other large language model that you can connect with, you can connect and do that. Make sure that you have that skill. You can have, like we are doing here, equity. If you have an equity portfolio, a stocks portfolio, you are trading or you are investing passively, and you want to know the spreadsheets, you want to know what your total portfolio is today, you want to know what if this happens, you want to look at the data of all those companies for the past 5 years, you cannot do that in Excel. That's what I teach. There were some wealth managers, there were online business owners, course creators, there were financial advisors. They all followed that last episode, and I improved this program. I'm very, very proud of this program. So join the VIP launch and make sure you raise your hand right now and you say, Rooney, I want to be part of this. I want to hear more about this. And then put your name, email, and then I will send it to you, because it will be sold out for sure, because we are delivering this not only to the Caribbean but United States. Everybody can participate, so there will be only a couple of spots, and then the spots, it will be opening, doors open, door closed, and then that's it, because I'm not old. The program is not available right now. When it opens, it's open and closed. So there are two experiences: the Island Wealth Investment Academy 3 days, and we'll soon also will open the doors, and the Python Island Wealth Management, Creating Digital Assets and Artificial Intelligence. That is the case. Now let me go to more aggressively, because we have this base case. Now I want to change this thing into the bear case, because I don't want to be too much optimistic. So let me just change this for the people who think like, hey, no, this is too much bear case. So let's Bitcoin increasing with only 25%. Now what it did the last years, and now we have some person who is going aggressively on Bitcoin. This person likes the idea, and this person says, okay, I am not the BTC, I'm a maxi. A maxi goes maximum, right? So what does this? This is a little bit riskier, but this strategy is basically telling you, I'm putting nothing anymore on my bank account. I'm going, portfolio converted to BTC is 80% and excess earnings. So this person is, we have to study this a little bit more, but this person is taking everything that he or she has, 80% of it, 80% of my excess earnings. So if I'm eating, basically if I'm this person, let me just imagine what is happening here. And the BTC 10%, if I have $1,000 of excess earnings, I'm putting $100 in. So every month, after eating, after paying my my things for my children, after paying the car, after paying the mortgage, after paying the food and the gas, I'm having $1,000. Imagine, I have $1,000. Rest. I can put that as a savings account and receiving 3%. But if I'm in this strategy, BTC 10%, then I would probably go with putting $100 in, right? I'm buying Bitcoin for $100. But in this case, in this case, I'm a maxi. If I have $1,000 after all my expenses, or $1,000 of profit in my business or whatever, then I'm going to put $800 in there. I'm only going to leave 20%, $200, but I'm going maximum in there. So the strategy is 80% of everything that you can lose, that you can afford to lose, you're putting it in. Now let me just put this 80% and say, where is this happening? You see, this is going to happen there. This is used there. But what I wanted to do is this maxi, check where this 80% is being used. You see? So it's going to be used to the left, but we are not going to dive into that right now. But it looks like if I am a maxi, so I'm putting this as a maxi, then all these things change. Because the maxi, this is the strategies, this is kind of the savings or investment strategy. So this normie, BTC plus, BTC 10% maxi, this is what you can do, the options that you can do. Are you going, you are not doing anything, you are not saving anything, or are you, what are you doing with your, with the money that are excess earnings? You understand? And excess earnings is, okay, you paid everything, you can now save and you can put it on the bank account. Or you can buy stuff with it. You can buy a new car. You can buy a luxury. You can buy Louis Vuitton. You can treat yourself for all kind of stuff, buying clothes. Are you doing that? Are you buying clothes, or are you investing that $1,000 in? Are you investing 10% of that $1,000 or 10% of that $10,000? Are you buying this scarce commodity? Are you storing your work? Are you storing your excess energy, the sweat of your life, the hard working? You have been working 40 hours a week, maybe 60, 70 hours a week. What are you doing with that? So this is a strategy of going on. Because you have 80%, you are able to buy more. You're buying more Bitcoin. You see that? You're able to buy more because you're turning the Bitcoin, you're turning that cash into Bitcoin. Basically, that's it. So what you see here is you're taking this 100% or this 80%, you're taking it and you're putting it into Bitcoin. This is just an arrow. You're taking this strategy and you are accumulating Bitcoin. And because you're doing that, your Bitcoin portfolio is going to increase. Understand? And then in 2024, you're going to buy much more Bitcoin because, why? Because the price is still low compared to a potential high price. Okay? So why can you buy less? You can buy less because the price of Bitcoin is going up, expected to go up. You see? So when you are here, you're not going to be able to buy anything that much anymore because the price is very high. So I think this is a very nice model because they already checked, like, you are not able to buy more Bitcoin. You are able to buy Bitcoin. How much Bitcoin are you able to buy? Basically, that's interesting. How much Bitcoin are you able to buy if the price goes up? You see? Look at this. Good. So in this scenario, bearish maxi strategy, then you see that your Bitcoin is going up. you're accumulating Bitcoin. And that's why you see here your net worth. Your net worth is going to 24 million. Now, of course, the 24 million US dollars is, you cannot compare it to the 24 million today. I would say how much is this 24 million worth today? How much can you buy with this? So my note that I want to put here, I'm studying and I'm putting some notes here. I would say how much of my current lifestyle in 2024 can I buy with this amount of dollars? Because 20 million in the future it's not the same as 20 million now. There is a time preference, and I have the feeling that they are not putting these in. You see the numbers going up, but that doesn't mean if the houses went up, if the equity went up, everything went up. Look at the house, the real estate, basically your house, you have 24 million. And here you had 408 million in 2024. You have 24 million. But how many houses can you buy? How many houses can you buy? Now the houses also, you had one house, the house went up to 680. So the house is almost 1 million. You see? The equity, how many equity can you buy? If you want to be rich, you want to be able to buy more equity, because equity is assets. You want to buy more real estate. So how much can you buy? Here you had basically the net assets is 4. Let's say here you had net assets 408, but you could buy only, let's say, half a house, because you divide this 408 by the 250. But here you can actually buy more houses. So you become, if you are interested in buying houses and buying equity, like the wealthy people, you want to buy more stuff, which is more businesses, or you want to buy more real estate. Those are precious stuff. Then you have to divide the total money that you have in. Total money is not important. You wanna know what is the value of your assets compared to how much houses you can buy, real estate, how much equity you can buy. You understand? What is the lifestyle? Because the equity and the real estate, they will provide you with the lifestyle. The lifestyle has already been up and running. So I believe in 2045, in this scenario, 2045, this scenario, basically, if we are here, a house will be worth, let's say, two and a half times the house price of now. Imagine that you have a house of 250, and now a house, your son will try to buy a house, and your son will for the same house, your son will have to pay $683,000. So basically, if you are a minimum wage income, if you are poor, if you are receiving social benefits, if you don't have a job, you will not be able to afford equity You will not be able, in 2045, you will not be able to afford equity. And buying equity means that you can buy business, you become wealthy, because the wealthy people have equity. Either a business, their own business, or they can buy all the businesses in the world. Shell, Nvidia. So while the poor are going to McDonald's to eat, the wealthy buy McDonald's equity. While the poor are using the gas of Shell to go to work every day, the wealthy buy the stock of Shell to deliver the gas. While the poor are longing to go on a cruise with Royal Caribbean, the wealthy buy the Royal Caribbean stock. While the poor want to have a Lamborghini, the wealthy own the stock of Lamborghini. So the wealthy want to buy stocks and real estate, precious villas. And in this scenario, I would say in this scenario, if we are in 2045 and this bearish case, and you want to become a maxi, you are more protected and your family is more protected, because the ordinary people will not be able to buy a real estate anymore. They will not be able to buy a house. The government will have a lot of bonds. Look at that. The bonds went from 50,000 to 180, 190. So 200,000. So the bonds 10x'd. The government, basically the assumption here is that the governments are running excess deficits, debt, currency. So I would like to have a picture of what does this mean. What would this mean for an ordinary people? I think I would expand this model with an economic model of Turks and Caicos, and an economic model of Curacao, or an economic model of Grenada, St. Lucia, St. Kitts and Nevis, Montserrat, Jamaica. So if you are living on one of those 12 islands, Curacao, St. Martin, if you're living on especially the 11 countries, Curacao, the 8 islands of the Eastern Caribbean, Jamaica and Turks and Caicos at this moment, then if you want to see your situation of your island and how that will be impacted by this scenario and these scenarios, then you want to participate in the Island Wealth Investment Academy, because there will be an experience especially for these islands, or people from the United States, people from the Netherlands, people from UK, Canada, that are interested in those specific islands, because we will be bringing all the data of those islands, the population of those islands, to break it down what is happening. If you are a business on those islands, the Eastern Caribbean, Turks and Caicos, Jamaica and Curacao, we will be bringing you more information and to put this into context. Because maybe your island is also an indebted island, or they want to become a wealthy island. So this is the scenario. Now look at the 24 million, and we still has the beer case. And let me just go double maxi. Let me go double maxi. So the double maxi is a little bit of a dangerous situation, I would say. I would say this double maxi is, you are actually going 100%. So everything you have in excess of your normal costs, that is basically the excess earnings, 100% you're going full in Bitcoin. Now, Michael Saylor is a double maxi. Maybe is even triple maxi. Tell me below. Tell me below. What is a double maxi? A double maxi assumption is you're going 100%, you're buying, you're not interested anymore in any savings, you are not interested maybe even in stocks, because you are turning 100% of what you can miss. You keep your lifestyle, you have $1,000, and 100% of the $1,000, the $1,000 is after your normal expenses, you're going to put it in 100% in Bitcoin. While the BTC Maxi, from the $1,000, you would put $800 in, and maybe you put 20% in something else. Maybe you buy stocks. See, you buy stocks. But here, you're not interested in stocks anymore. You are putting 100% in Bitcoin. This is a strategy. And then, you're also increasing your mortgage. So you're using your mortgage debt. You're going to the bank and you're saying, hey, I want to maybe increase my mortgage, and you're using that mortgage to buy Bitcoin. Now, why is this strategy very, very risky? I'm putting it as a risky because you're buying, you're raising debt to invest in something that possibly can go up. But if it goes down, you still have the debt. You see that? So you're playing with the bank's money, and in the BTC Maxi, you're playing with your own money, and you're playing with 80% of the money, and you're keeping 20% liquid, or you're keeping 20% and you're putting it in stocks. But here, this is basically the interesting part, is they're creating debt. Now, if you want to look at how this has been done, you have to study the Michael Saylor's BTC strategy, because Michael Saylor has used this strategy, the double maxi, or maybe the triple maxi, but the MicroStrategy, the company, the public company of Michael Saylor, has actually raised debt, just created a bond at a lower interest percentage, and then used that to invest in Bitcoin. And that has proved to be so far very, very efficient and effective for them. So this is when you are actually using your debt to buy extra. Now, what would this mean? This would mean that you're actually playing with money. You're shorting the dollars because you say, I'm going to the bank, and the bank is going to loan me. Maybe the bank is using my collateral because I have a lot of, I mean the person doing this, the bank has mortgage, the bank wants to loan me money because I have all kinds of stock portfolio, I have a lot of assets. So this person has a lot of assets, equity and everything. The person goes to the bank and says, okay, maybe based on the net assets, or maybe put all these things as collateral and give me some loan. And that loan is not to buy a Ferrari, not to buy a Porsche, not to buy luxury, Louis Vuitton, not to go on holidays, not to buy consumption, not to buy more houses, not to buy a Harley Davidson, not to buy anything but to buy Bitcoin. So that's the strategy. Now, Robert Kiyosaki, Rich Dad Poor Dad, is using debt to finance real estate. When you have property, real estate, he's using debt. Some people want more debt. Why is that? Because if they are printing more money, then you want more money to just raise capital, raise money, and use that for investment. So there is a strategy, but you have to be very, very careful, or you have to know what your stuff is, where you have debt, and the debt will be invested. Now, if the strategy, last thing I want to say about this can go wrong when the debt is, for instance, 5% and Bitcoin return is less than 5%. Or Bitcoin's price drops. I think that would be interesting if you follow this double maxi and then the Bitcoin, it becomes bearier. So Bitcoin's price drops. That would be another scenario which is just interesting. So what I would do here, I want to put this, and I might want to make a note, and the note will say, analyze what will happen if this strategy is followed and price of BTC drops with 50% for 5 years. Just playing with it, because with a model you can run scenarios. But in this case, this double maxi, when you put it in, you see that the person can buy more BTC. So if you turn this double maxi and you say, I'm not double maxi, but I am, look at what will happen. So the person bought 9.7 BTC, Bitcoin, but with the double maxi, if the person was not the double maxi but just a maxi, he would have bought 7.1 BTC. So because they are accumulating debt. Alright. So in this case, you will go to an extra. So to an extra 31.6 million. Because you're using debt. They are printing debt. They are printing money. They're printing bonds. They need the money. The government needs the money. The banks need the money. And you're just going there because you're putting your collateral, all your assets, and you're saying, hey, give me the money and I will buy Bitcoin. You guys continue to print money, I will buy Bitcoin. You're shorting the money. You think that the money, the value of the money will go down. And that's why you're taking every dollar you can get, and you're not looking at your bank account with dollars. You don't want to become millionaire in dollars. You want to become millionaire in the amount of Bitcoin. So there are people, you would get 9.7 Bitcoin. Imagine people in 2009 looking at Bitcoin, and they bought Bitcoin and they have 100 Bitcoin. These people are just like, you will not see them. Imagine those people. Okay, this is the double maxi. The last point I want to make is I want to turn this into a triple maxi. Triple maxi is actually doing the same as double maxi, but I think they are saving more. They are saving more. So how does that work? Let me put the triple maxi in there. So the triple maxi is saving more. We have to check and study this. And the triple maxi will get 15 Bitcoin. So they can buy more because they have the mortgage and they have a higher savings rate. See that? So this is the amount of Bitcoin they can buy. Alright. I want to finish now. I want to finish by looking at the end. If you found this episode worth a lot, I want you to just join. I want you to just join the community of Island Wealth creators, Island Wealth builders, the community that builds wealth. And when you join, you only have to put your name and your email in there. I will not spam you, but you will join the VIP launch, and that is a group of people who are receiving tips, receiving more information, receiving more invitation to join to create wealth. Those are paid programs behind the curtain, behind the scene. Those are paid programs where we go into how do you do this. How do you do this? You can bring your portfolio. We are not giving you financial advice, but we are giving you strategies, tips, etc., for educational purposes, to educate your mind. What do you have to do? Just click www.bit.ly/islandwealth. If you want to join one of our programs, or you want to be in the VIP launch of one of our programs, waiting for the doors to open and then the doors to close, to be given an offer. You don't have to take the offer, but you will be participating in the experience when I tell you about the offer. You will be the first one to hear that there is an offer. Maybe the offer will not even be put on social media, on LinkedIn, on Facebook, on YouTube, where this show is being streamed. Maybe you will nobody will see that opportunity when the doors open and close, but you will see that opportunity because you are in the VIP launch. So this is the moment to raise your hand and say, okay, I want to be there. Click there, bit.ly/islandwealth. Then, if you want to look below this video, there might be a link down there for a specific experience that I'm working on right now and finishing right now. And that specific experience, the door will also be opening soon. So if you see a link below with the name of that experience, you can also click there and join that specific VIP launch of that experience. So you can click below if you see a link, and then you will see all that opportunity. So you can subscribe and join one of the VIP launches of Island Wealth, or you can be checking the VIP launch of this program below here. Okay? That means that as soon as the program opens, the experience, you will be hearing from that experience. I will be telling you why you need to invest, what are the problems that we solve, how long that experience will take, who the experience is, and if you find it valuable, if it is a match, then you might consider to join. Okay, my name is Rooney Calmera. Today we have talked about the individual investing in Bitcoin. Everything which I have said is for educational and entertainment purposes only. We have looked at the triple maxi, the maxi. We have looked at the BTC bear case, at the base case, bull case, and we have looked at different strategies and how to fill in the BTC model, individual micro model. Next time we will be talking about the institution or the corporate. We will be looking at the corporate, so make sure that you are there next time, because we will be talking about the corporate. The corporate means that you have a business, or you are studying a business. Maybe you are studying Tesla, you are studying the stock of yourself. Maybe you are studying the investment of a restaurant. Maybe you are studying the investment of a private business in your country, on your island, and they are thinking about doing this, about putting Bitcoin on their balance sheet, about having a strategy to earn money in Bitcoin, to be paid in Bitcoin. Maybe they are a software company. So next time there will be on the corporate. I'm very excited to do that, because what would happen if Tesla would have a strategy? The corporate Tesla, what would happen if Nvidia, with the Nvidia investors, with all the growth of their stock, what would happen if they would invest in Bitcoin? What would happen if Microsoft invested in Bitcoin? What would happen if any Shell invested in Bitcoin? Do you have that question? Question below. Any question you might have, ask them below. We will look at all the questions. Now, that's it. Join Island Wealth channel. Join the VIP. That's it. We're done. So now we go back, and then let me just show you. I would like to do this. Let me count down again.